Hi, everybody, it's FIBO Group, and you are watching to the Market Watch review. Yesterday's late rally of U.S. shares carried into the Asia-Pacific session, where all major markets advanced. The bears aren't giving up, however. Europe's Stoxx 600 is closed for the sixth consecutive session, and U.S. futures trade lower. The U.S. dollar is more stable than all major currencies. The price of gold remains steady at $1,680 in Europe and $1,666 in the United States. December WTI is close to $85. Asian Pacific market. Japan's August inflation was slightly higher than anticipated. The headline CPI increased by 3% to 2.6% from 2.6%, while the core rate, which excludes fresh foods, rose to 2.8% to 2.4%. Both rates were 0.1% higher than the median forecast in Bloomberg survey. The dollar traded at the top of the three-day range against the Japanese yen, which is roughly JPY 142.70. Minutes from the Reserve Bank of Australia's meeting earlier this month highlighted the message that rates have reached levels that could encourage a slower pace of growth. In each of its last four meetings, it has increased its cash target rate 50 BP. It will meet again in October. The Aussie has been turned back after extending its two-day advance of almost $0 and 6,750 cents. Market of Europe. In July, the Eurozone posted a close to €20 billion deficit in its current account. This surpassed the €15.6 billion surplus in the first half. Although the euro reached a five-day peak near $1.50, it was quickly resold to $1 in early European trade. Yesterday's sterling recovery extended to $1.0460 today. This is just short of the pre-weekend high of $1.1480. Today is the third consecutive session in which sterling has traded below $1.15. Market of America. Before the FOMC meeting ends tomorrow, the U.S. will report some housing data. Today's housing data includes August starts. The U.S. housing starts have fluctuated between monthly gains and losses since the end of last year. Canada report August CPI today. This broad pattern will likely mirror what we saw in America. Although the headline pace is slowing, core rates are still proving to be sticky. This speaks to the breadth and depth of price pressures. After peaking at 8.1% last June, the headline CPI is expected slow down for the second month. Initial USD follow-through was quickly exhausted at CAD 132.25. The reversal in U.S. equities helped propel the greenback towards CAD 1.33. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.